As of 23rd of April, the world has reported 2.6 million cases of CV-19 infection. Across the world, countries have been practicing lockdown to prevent the further spread. Shopping malls, restaurants, airlines, and borders will be introducing new technologies and new measures to detect sick people and to monitor the crowds more efficiently. The company I'll be covering today plays a big part in shaping the new norm of the world after the crisis. This is Terrence, and I'll be covering US stocks outside the big names. The market is slightly more than just Tesla, Amazon, Facebook, and Microsoft. Now, the stock I'll be covering today is FLIR Systems, listed on the New York Stock Exchange. It is the developer and manufacturer of thermal imaging technology. Basically, they produce cameras that visualize temperature. On last Friday, a news came out from the Reuters mentioning how Amazon is adopting thermal imaging technology to monitor its workforce in warehouses. In particular, the imaging technology allows them to identify employees with fever or abnormal body temperature. Now, the market perceived that as the new norm of the real economy, and that FLIR Systems will be the very beneficiary of this new wave. So this is just an overview of how we will tackle this. Firstly, let's try to understand the business by knowing what they sell and who they are selling to. Now, the main product of this company, as mentioned before, is something called thermal camera, which allows us to visualize temperature, and it looks something like this. Although it is not widely used by normal people, it has a variety of applications for commercial and government clients. The business can be broadly divided into three segments, which are the industrial unit, government and defense unit, and also the commercial unit. Now, with the first one being industrial unit, customers in this segment could be manufacturers who need to monitor the temperature of the manufacturing site. It could be the firefighting department to assess the condition of a burning building before entering into it, or it could be an oil and gas producer using the thermal camera to visualize and pinpoint gas leak. In 2019, this segment contributes $737 million in revenue, $240 million in earnings, which give us a margin of 32.7%. The second business segment would be the government and defense unit. The main product offering is the high-definition thermal imaging system that could be applied on places like maritime patrol and border surveillance. It is sold to ports, border security, Air Force, and critical infrastructures. Now, all these organizations are relatively recession-proof, as national security is always a priority. Even during a recession, it is unlikely that the government would cut budget on these items, which indicates that it's a pretty secured revenue stream for the company. This segment contributes $794 million in revenue with an operating margin of 26% in 2019. Lastly, we have the commercial unit. The customers in this segment could be either commercial or recreational buildings like offices, hotels, and shopping malls. The core product offering here are thermal imaging camera. Traditionally, the thermal imaging is used for traffic monitoring or security of shopping malls. But after the outbreak of the virus, there is a trending application of thermal imaging to identify customers or workers with abnormal body temperature, aka potential patient, and it prevents mass infection of virus. Similar to Amazon, clients in the real economy are likely to adopt this technology as a means to monitor public health. It can really act as a catalyst for a rally of the stock price as people expect material growth in this space. Since the article has been released, the stock price has gone up 17% from $34.15 to about $40 in a matter of 2 trading days. However, it still has a long way from its yearly high of $58. We will dive deeper into the valuation later this video. So let's look at the concrete financial data for the company. Here's what stands out for me. First thing first, we can see continuous profitability for the past 5 years. The top line figures from revenue to gross profit have been pretty consistent for the past 5 years. It shows a growth rate of about 4.2% every year from 2015 to 2019, which is not spectacular, but very, very stable, probably in line or marginally beating the inflation. As we mentioned earlier, the vote of confidence from Amazon to adopt their technology to monitor the health of the workforce could be the catalyst for future growth in the commercial field. The company has been profitable for the past 10 years, delivering an earnings per share ranging from 72 cents to $2.05, which is a pretty good sign for long-term investors out there. The second thing I want to mention is their balance sheet. Now, the company has a pretty strong balance sheet to safely grind through the difficult periods ahead. As at end of last year, the company has a debt-to-equity ratio of 0.67, which is in fact really, really low if you compare that to the market and its competitors. If we look at the interest coverage ratio, it returns 10.2 times, which means the company has adequate earnings to repay its interest expense. Lastly, cash flow wise, the company have had free cash flow ranging from $266 million to $343 million from 2016 to 2019, which again indicates stability and that the company is of good health in terms of profitability and liquidity. So far the narratives sound pretty positive, but let's also look at the flip side of the coin, which is the risk factors. So the first thing we got here is the concentration of sales from the US government agencies. Now, the percentage of revenue derived from US government are 32%, 29%, and 26% respectively for the past 3 years. The funding of contract is entirely dependent on the US government with very little control from FLIR Systems. Should there be changes in government budget or priority, or if the company lose the eligibility as a provider due to, say, a breach of security regulation, their revenue could be materially impacted. Now, the second risk that we want to touch on is the exposure to uncertainties in international trade environment. For the past 3 years, international sales accounted for 45%, 47%, and 47% of total sales. On top of that, FLIR Systems have significant workforce locating in the UK who enjoy the benefit of UK's membership in the European Union. The lack of clarity about the Brexit path and the UK laws and regulation creates uncertainty for the business. Potential changes in tariff or tax law will have major implications to the business. Now, the last risk factor that we want to touch on is competition. Competition is intense in the industry. FLIR System must be proactive in identifying new applications for thermal imaging. They have to develop products to satisfy the demand while maintaining competitive price and high functionality. Now, for different units of the business, there are strong local and international competitors. For example, in the government and defense space, you have companies like Lockheed Martin competing on surveillance technologies. You have got Sony competing on the thermal imaging or the commercial field, and plenty other well-established European or Asian companies. So failure to innovate or maintain a good reputation will drive them out of business in a short period of time. It appears to be a stable business with growing earnings year on year, but is it worth putting your hard-earned money into the stock? To get the answer, let's look at the 52-week price chart of it. As at the time of making this video, the share price is at $40. The 52-week high and lows, $59.44 and $23.85. At the first glance, it looks like it is reasonably priced, being nearly $20 off the high. But let's look at other metrics. For the time being, it has a price to earning ratio of around 28 to 30, which is substantially higher than the market PE of around 20 to 22 at the moment. Also, bear in mind we have looked at the revenue growth rate. It stands at 4.2%, which is just slightly above the inflation rate. In that case, the PE of 28 to 30 appears quite expensive to me. Of course, we can argue that the vote of confidence from Amazon could lead to material growth in revenue in the commercial sector, but honestly, I cannot quantify the number exactly, and that the risk exposure to international trade kind of offset the upside to me. I would be much more comfortable to invest in this stock if the price is around $30 to $35. Now I just want to thank you for staying till the end of the video. I spent hours working on it, and all I'm asking for is for you to hit the like and subscribe button.